So what is the long-term impact on our economy as this housing drama plays out? Let's bring in Jonathan Hoenig and Tracy Burns and Crash Proof author Peter Schiff. Peter, Bob Toll seems to be saying, yeah, it could get a little worse, but I don't want to put words in his mouth. Not necessarily a lot worse. Well, you argue a lot worse.
Well, I mean, first of all, Bob Toll, look at his position. They've got a lot of inventory. They want to get rid of it. I mean, it doesn't make any sense for him to be out there telling people not to buy his products. But from my perspective, everybody now will agree that loaning money to people who can't pay you back, who have no down payments, who lie about their income, who rely on teaser rates, that all this stuff is not a good idea. And so these lax lending standards are coming to an end. But the problem is they produce these artificially high home prices. And so we can't go back to traditional prudent lending standards without going back to traditional pricing. And real estate prices around the country are still much too high. Homes are unaffordable using traditional financing, so prices have to go down. They have to come down a lot.
How much is a lot?
Well, in a lot of these bubble areas, like down in Florida and California and the Northeast, prices are going to go down by 40–50%.
Even from here?
Well, the new home prices have come down somewhat, but still the existing homes, the big inventory of homes that are on the market, are still only down maybe 5 or 6% from peak prices. And and he mentioned, Bob Toll mentioned about the chain. The reason that people were able to buy these expensive homes is because they could sell their home to a subprime buyer who was able to pay an inflated price. But once you take that away, then people don't have the down payments to buy a new home because nobody in this country has any savings anymore.
What do you think of that, Tracy, that there could be much further way to go?
Well, to his point, and I try very hard not to agree with Peter on most things, but the prices do have to come back down to mean. And then generally from mean, we're going to have to dip a little bit more if you believe in the whole notion of peaks and valleys. So we haven't even hit our valley yet. So yes, they will come down. But I think that
how much is down to you?
Well, definitely more than what we've seen thus far. 5–6% is probably not enough. It needs to come down more than that.
Okay, Jonathan, now Peter was saying in some hot markets still another 40% plus to go. What do you say?
Well, I think it's very possible, Neil, especially in the speculative markets. But the flip side of this coin is you need some place to live. And I think, frankly, it is always a good time to buy a home that you can afford. Now for I'm an investor. So from an investment perspective, real estate isn't really a hot asset class right now. And I don't see that turning. I mean, even though the prices have come down, there's really no indication that they're ready to kind of turn around and head back up again. But in terms of, a young couple just starting out, my feeling is there's some terrific bargains out there. Find a home you can afford, even if rates tick up 0.5% or 1%, and enjoy part of the American dream, which is home ownership.
But Jonathan's right.
You can rent it.
Jonathan's right. People need to be reminded that if you have good credit and money, you can still get a house, and you can get a house with a good deal. Like, I would want to go buy one of Toll's homes right now because he'll probably throw in the granite for you.
But you have to remember that you can have a place to live without buying. It's something called renting. I'm doing it myself, and it makes a lot of sense. I mean, I've got plenty of cash. If I thought homes were cheap, I would buy them. But the problem is, I look at what it costs me to rent them, and it's so much cheaper. It still doesn't make any sense. So a young couple should look around at all the homes for rent, and if they can rent a much nicer home without any of the headaches,
all right, guys, I want to bring in a housing and personal finance expert, Lynette Calfani-Cox. She's the author of Your First Home. You've heard maybe some of this, Lynette, that we're not out of the woods yet. Do you agree with that?
No, I definitely don't think we're out of the woods yet. If you look at all the statistics, it points to lower home prices in 2008, more foreclosures on the horizon. The inventory overhang that we're seeing still has an issue that has to be dealt with.
So if I'm a first-time home buyer, how would you advise me?
I think it is a great time to buy. I mean, you should take advantage of those opportunities right now.
Well, I have a guest who's saying, Peter Schiff, he's been pretty good lately. We have a lot of very hurting markets that are going to hurt some more.
Yeah, I mean, the question is, do you try to absolutely time the market? Nobody's going to be able to pick the bottom and say...
So you agree with Bob Toll, who says, you might not catch the bottom, but this will come back as a great time.
Absolutely. And the fact of the matter is, we've already seen prices drop to the point where you can get fabulous bargains, especially if you're a first-time buyer or even a move-up buyer.
If you can get a mortgage, isn't that the problem now?
Well, tighter lending conditions, no question.
So those younger people have to put down more than they ever did before.
But you know what else? The fact is, there are programs out there designed specifically for first-time home buyers through cities and nonprofits, etc.
Yeah, people have to look, though, at the cost of owning versus the cost of renting. A lot of people were buying
Peter,
homes.
I don't mean to jump on you, but that break's coming whether you and I are talking or not. I want to thank you all, and a thought for you. Maybe Bob should have gone into video games. I'll explain after this.